benchmarking, which is like how much American Airlines is making, how much United Airlines is making, how much British Airways is making by group discount and so on. And there also, there were benchmarks of 15% to 16% which was available internationally. So it is a very important business performance indicator as to how a group discount is effective. Whether it is able to make 15% or not is actually reported on a monthly basis. So the internal auditor then went and asked the management as to why are we only making 7% and why there are other players in India who are making 14% and why there are international players who are making 16%. Why? When he went about asking this question, obviously he has to find the answers from going back to the group discounts team and ask this question that, okay, why are you making 7%? So there was a revenue head under which there was every airline industry has a revenue head. So in that revenue head, we had one of the teams which was group discount team, and there was a head of group discounts team. So there were 4 people working in group discounts team, which was operating like a call center, and there was a head of that reporting to the revenue head. So he went to the revenue head. He said, go to my group discounts controller head, ask him. Obviously, he also sat in that discussion. It was interesting for him to know what is happening in the other airlines industry in India and internationally. So he also sat in that discussion. And then he went about going into asking some of the very, very basic fundamental questions. So he said that there are 4 people in that team. The second question that he asked was, how many requests or how many calls do you get or how many emails do you get per day? And the answer was roughly 1,000 emails per day. And then the question was, okay, how many number of calls do you get? Because you operate also a call center. How many number of calls? And the answer was, sorry, we don't have that record. We don't have that record. The third question was, how do you monitor it if you don't have a record? The fourth question was, do you answer all 1,000 emails, 900 to 1,000 emails that come in? The answer was yes, more or less yes. We answer. Okay, just show us. How do you answer? Can you show us the emails of how do you answer? When you get an emails of 1,000, how have you responded? Can you show us? Surprisingly, out of the 1,000 or 900 emails that came per day, only 100 got answered. There were days where 400 of them were answered. There were days where only 100 of them were answered. But there was not a single day where all 900 or 1,000 were answered. And all of those records, we went through the emails and scanned it. Because when you get a request over the email, ideally it has to go in 2 hours or 3 hours. It cannot go after 3 days because the flight is gone, the customer is gone. So you have to respond in the immediate day, immediate next 3 or 4 hours. And then the point was, why don't you answer all the emails? Oh, we are only 4 people. And one person takes, even if he responds maximum 100 emails a day, maximum we can answer 400 emails. Oh, so this is an issue? Did you tell it to the revenue head? Oh, revenue head knows about it. Because the promoter of the company has done a cost cutting all across the company. So when every department has got hit, and I'm sure you know that airline industry has gone through bleeding times in the past, right? So they did a cost cutting and they removed some of the people. So out of this group discounts team, there were 7, 8 people, 3 or 4 of them were fired. And he said that, okay, go with 4 people and do all efficiency and make sure that you respond. The very logical thing is that one person could answer not more than, at the most, 150 emails. Really. If he's also answering the calls, he cannot answer 100 emails, more than 100 emails. he cannot answer more than 80 calls. And that was the logical review, the time and motion study we did, which were done by the internal auditor. Okay, let me do it. Let me see how much time it does it take. And then he went back and said, sorry, you need not just 4 people, you need now 10 people. And if you were to need this 10 people, you will be able to answer all 1,000 emails. You will be able to answer all the calls. And therefore, what will happen? What will happen? Presently, you are answering 40%. You are making 7% of the revenue. So if you were to answer 100% of the emails, you would obviously make the double of the revenue. And that's where the answer is. So the second question was, if we are to make this investment of 6 more people, what is the cost? 25,000 rupees per person per month. Because these are the call center guys. They don't have to do anything. They have to just answer emails. So what is the cost? 25,000 rupees into 6 more people, which is 1,50,000 rupees per month, and which means 18 lakh rupees per annum, and which means including the best of the incentives that you would give them, let's say 25% incentive that you give them, your cost would be 24 lakh rupees per annum. And if your cost is 24 lakh rupees per annum, how much your revenue is going to be? From 7, it will at least become 12, if not 14. Because you are answering now 1,000 emails instead of 400 emails. At least 5% will go up. And 5% of 3,500 crores is how much? Is how much? Can you do that calculation? Crores. How much investments are you making? 24 lakhs. How much revenue are you going to make? 175 crores. What is the profit? 173.76 crores of profit. There is no extra investment needed other than this. You just have to get 6 more people, get them to sit on the desk which is already available in the company. Some place is available, they'll sit. You'll have to at the most give them a laptop, but this is a direct cost. Okay, the other element of this is, what is your occupancy? Do you want to increase the number of flights to make this revenue? The answer is no, because you are only operating at 70% occupancy. Your flight is only 70% occupied. So easily it is possible to add 7% more and still become less than 80% occupant. There are airlines in this country which operate at 95% occupancy. So it is easily possible to go with 88 or 90% occupancy. Right? Is this not a very important issue? What happened with this issue? This issue, when it went to the management and the CEO, they were making 174 crores of losses in a year. And what would happen? Just imagine what would happen. What would happen to this internal auditor, and what would happen to the revenue head, and what would happen to the CEO? Imagine what would happen. This is the outcome. And this is actually one of the examples which has actually been reported in one of the actual internal audit reports of that company in India. So having said this, I think we have made enough point about the need for business context. So in this case, if you really looked at it, what was the risk? What was the risk? What was the risk? Risk of losses, right? What was the risk? You've just told the business to make some extra profits, to make some extra sales, to make some extra revenue at a cost of 24. You didn't think that what is the risk in that company. You just thought about maximizing the business. revenue, the maximizing the business value, and that's what is internal auditing with the business context. Having said that, let's just move on. Sorry. There is a very important concept which is internal audit quality assessment, right? This concept is very well known in India. This concept is very well known in rest of the world. It is called as quality assessment of internal audit function. Does the internal audit do adequate quality for its job? Are adequate things being followed? Are the processes, procedures, quality being followed by the internal audit department? It's a very, very important subject. So you've got some of the standards on external and the peer quality assessment from the Institute of Internal Auditors in the US, and you have got the standards SIA, the standards of internal audit in India, which also deals with external and the peer quality assessment. Although this standard is a recommendatory standard, this standard advises, recommends, and mandates the internal auditors to follow certain very important quality standards. So I have, let's say, used an acronym here, just a short form here, which is IAEQA. It stands for Internal Audit Effectiveness and Quality Assessment. I've added the word effectiveness. Quality is linked with effectiveness. And when you talk about effectiveness, you are able to see how much of value a business auditor or an internal auditor is able to add. If you were to use a framework for this, there are about 6 parameters on which you will assess the effectiveness. So while you may make notes, I'm fine. I will also have this presentation sent over, so it's very easy. You can have this presentation. It's not something copyrighted. Still, if you want to make notes, I'm very fine with it, but I think it's important to just understand it. So on the top we have business oversight assessment, which is at the top, the tone at the top, right? And that tone at the top is about whether internal auditor is receiving the right amount of oversight, right amount of attention from the board. And there are 3 pillars here, very, very important pillars if internal auditor has to be effective. And these pillars are people competence and skill assessment, PCSA, people competence and skills assessment. What does this mean? Does your internal auditor have enough competence, have enough knowledge, have enough skills to be able to do justice to that area which he has been assigned to do internal audit of? For example, if I am assigned to do an internal audit of a construction project, do I know construction industry? Do I know civil engineering? Do I know some of the standards of civil engineering? For example, today there are certain auditors which do construction project audits who are able to see that if you were to able to put up a concrete structure like this dais here, how much of steel would go in, how much of cement would go in, how much of sand would go in, how much of even water would go in. Because water is not an expensive commodity, but if you use more water than is required or less water than is required, the quality of this will get affected. So there are those very specialized auditors who understand construction industry and who have got competence and skills to be able to deliver an assignment for that particular scope area. And that's where this is very important, right? It is also brings a very important element of an approach. The example that I just gave of an airline industry was not a rocket science, right? It was something very basic. Okay, group discounts, you make 7%. How much is your competitor making? Why are you making less? How many people do you deploy? How many emails do you get? How many of them you reply? How many calls do you get? How many of them you reply? This was a basic thing. But an approach of the auditor was thinking on the business revenue. Whether the organization has right structure to be able to make enough revenues. So therefore, people competence and skills assessment, IA structural assessment. What is the structure of the entire enterprise and where does the IA fit in? What is the reporting structure? Where does it report to? Does it have a right amount of structure? Which is again a very important point. Third is cross-functional engagement of IA. Typically as auditors we think that we are enemies of the business and business is our enemy. Right? Sorry? Typically as auditors of the company, we typically think that we are enemies of the people in business because you want to find faults. You are not doing your job properly, sorry. And that's what I'm going to go and report. And those guys will not give you enough data, not give you enough information, will hold back because they find you as fault finders. Do you engage enough with your counterparts in business in different functions like finance, like operations, like purchases, like sales, like marketing? Do you enough engage with them so that they don't see you as fault finders? Remember, if you are able to go back and do business improvements, see, there is a way and style in which you present. You don't go to the audit committee and say business is inefficient, right? You don't go and say that. You don't write that in the internal audit report that these guys are incompetent. You just present objective facts and analysis, and you are not affected by who the people are. You are just able to give the objective solutions. At times you are able to sit with the process owner and he will tell you, यार तुम report लिखो, कोई problem नहीं है. You write the report. Don't write this language. आप लिखो लेकिन यार इतना गलती मत बताओ हमारा. You should be fine with it. Because you are enough engaging with them. Next time they will not support you. Because you are not a spy. All you are doing is driving the improvement. And if that is the case, management is also having an agenda of driving the improvement. And if your objectives are completely congruent, then where is the conflict? It's all about reporting and going to the top and going to the audit committee. That's where the conflict is. Otherwise, they are your friends. So there is a way in which at times you have to deal with the board presentations, audit committees, how to write a report, and make sure your people in the business are your friends, your colleagues are your friends, and therefore make sure that you engage with them enough. In fact, there are times when, some of the junior auditors, for example, when they went and did audit, they were able to talk to, while they were talking with one department, they were talking with the other department. Bhai, tumhara issue kya hai? They'll say that department is not giving us things in time. But that was only when you were friends. You were able to do that friendship. You were able to do that relationship with the business. You are able to do that. People have done that. Internal audit functions have been successful in doing that. There are places that you will hit the wrong buttons. You will rub people on the wrong side. And the things may go wrong. It's quite possible. But I'm saying that do enough engagement. And how do you do that engagement? So, for example, if management comes and tells you, okay, internal audit team, please look at certain expenses, marketing expenses. That is not the area given by the audit committee. It is the area which management has given you. Can you do it? This is a scope enlargement. I am just requesting you to do it. Otherwise, you'll have to do it internally. This is an area that you are doing for the management because management, it shows the amount of trust that the management has. Because you are engaging with them. If you go back now, because this was not there in the scope of the audit report, and you still go back and report to the audit committee, this is the finding. Management will not cross-functionally engage with you. Some of the people in the functional department will not engage with you. So I am only saying that to gain enough respect, to be adequately effective, it is important to go back, very important to go back and cross-functionally engage with the management to understand what they think about business, where the issues are, how to take up internal audit, how to jointly, so internal audit report is not just presentation by internal audit, it is also a presentation by the management on the action plan. So if every finding of internal audit is disputed by the management, it doesn't make any sense. And that's where you have to sit across, report. I'm saying don't get your independence affected, but make sure that report is giving out all the details. At the same time, it is not rubbing people on the wrong side. It is not attacking anybody personally. And of course, as internal auditors, we don't do that. But at the same time, the language becomes very important. The perspective becomes very important. So that is the third element. Sorry. Cross-functional engagement of IA. And that's the tone at the top. These are the three essential pillars. And then we have got two foundational elements sitting down. Foundation of this entire function. And at the down, we have got internal audit process and technical areas. So meaning how each of the areas are getting enough attention by the way of scope of work. So